Gary Barnes. Welcome to Stringham Real Estate Edge. Today's guest is Beau Pili from Oasis Title. Beau, welcome. Thank you for joining us.
Thank you for inviting me.
How long have you been in the title business?
I've been in the business for 12 years.
And what brought you into the business? What was the attraction?
So my mother was a title assistant, and seeing her growth in the industry, I felt like it was an opportunity that I couldn't let up, and wanted the same opportunity and chance, and just been seeing the different opportunities out there within the title industry piqued my interest, and so
here you are.
Here I am 12 years later.
That's great. Well, tell us about Oasis. Is this a national company or a local company?
So Oasis Title is a local company. We started about 2 years ago, and just wanted to go out there in the market and do something a little bit different.
Sure.
Yeah.
Well, tell us actually, what is title insurance?
So
Give us a definition.
So title insurance, what we're doing, it's an indemnity insurance, and so it's protecting or insuring against any potential loss. So in this case, title insurance insures against defects in title, or on behalf of the mortgage company, it protects them to ensure that they have first lien position. So any infeasibility, or where the mortgage might seem like it's not in first position, that's where the title insurance comes in.
So if I understand this right, title insurance insures events of the past versus normal insurance, casualty, etc., insures events of the future. Is that a fair?
Correct.
Separation?
And that's where people get mixed up. When they come to closing, they're like, "Oh, I'm already paying for homeowners insurance." Well, this insurance is completely different. Slight difference. We're only insuring the real property, whereas your homeowner's insurance is insuring against perils such as fire, earthquakes, things of that nature.
Future events.
Correct.
What's the history of title insurance? That's not necessarily a new concept, is it?
No, so it was back in the 1800s, where a lot of buyers, they weren't able to be protected from loss due to liens that were recorded against the property, but were not disclosed. Such as back in 1868, it was Watson versus Muirhead. And in this case, Watson, who was a buyer of Muirhead's property, went to go purchase his property. Muirhead was made known of a lien that was on the property, but according to Muirhead's attorney, he was told that the lien was not part of the property, that it was invalid. So they proceeded forward with the transaction, and come to find out the lien was still a part of the transaction. And so Watson actually lost his investment in the property.
Really? And so in that period of time, there was such thing as a registry. There was an entity acting as the Secretary of State or whomever this would be filed with.
Yeah, so
that didn't exist in that period.
It did to an extent. They call it the Torrent system, the land registration, where the government will determine by certificate whether you hold title or not. And a lot of countries still use that system today, where the U.S., we use a completely different system. We use a county recorder's office, where then documents are recorded with the county, and that gives us, the public, or us, the title insurance company, the ability to then do an examination and see who actually owns the property, or if there's any liens.
So after that event, some individual with a fair degree of creativity, understanding real estate, assumably, decided to start a company to insure against those perils. Is that kind of simplistically?
Yeah, so it was in 1876 where the Pennsylvania legislature, they decided to incorporate title insurance companies into their state. And then shortly thereafter, named Mr. Morris, he then started the first title insurance company, which is known as the Real Estate Title Insurance Company of Philadelphia.
And then from there, it just spread.
Throughout the United States.
Throughout the United States. Is it mandatory to purchase title insurance on all real estate transactions?
So most institutional lenders, they would require a lender's policy, which
Okay.
again, from our
So,
discussion
so
earlier,
when it's being financed.
when it's being financed,
Okay.
exactly. And then the buyer, it's up to them whether they want to purchase the owner's policy or not. Most of the times in Utah, the real estate purchase contract dictates that the seller is responsible for paying those. But.
Sure. What sort of a due diligence process does the title company go through in terms of reviewing any historical events impacting that particular property?
So my history, I started in the title side, and this is where we do our due diligence, where we take a piece of property, we look at the county recorder's office through abstract of title, and we follow the ownership of that abstract, and then we also check against liens, judgments, anything that might affect the property is something that we show on a commitment for title insurance.
How far back do you go, Beau?
So typically, our underwriters like us to go about 40 years back, but based off of the type of property it is, they call it a meets and bounds, so there's no plat, there's no subdivision tied with it. So we go back as early as patent, which was back in the late 1800s.
So a patent is when the property ownership originated from the U.S. government.
Correct.
Is that a simplistic?
Mm-hmm.
What specific protection is provided by a title policy? Now you mentioned unknown liens. Is that the only thing, or are there other protections?
So it's the transfer of ownership as well. So as you do the examination, you're making sure that that chain of title flows correctly. And if there is a disruption in that chain of title, you correct that chain so then it flows. So then there isn't, an owner, a prior owner that shouldn't have conveyed title isn't conveying title that he doesn't, or he or she doesn't own.
So you're assuming that the grantor has the authority to enter into this transaction.
Correct.
And how do you confirm that?
Again, through the recorder's office and the abstract of title, we go back through, make sure that the chain of title looks clear and that it flows. And the minute that there's a disruption, say it's a LLC and the property's coming out of the LLC, but the person signing doesn't have that signing authority, then it's an improper transfer of title.
Okay. Now you mentioned the word abstract a couple of times.
Yep.
Can you define that for us? What's an abstract?
So it's something that the recorder's office is something that we use to then determine who properly owns the property. So it's a set of records, if you want to say.
Like a history,
Correct,
for lack of a better word. Okay. And how long does the insurance last on a title policy?
So in the lender's policy, it lasts as long as the mortgage is on the property.
Okay.
And then the owner's policy, as long as the owner has that interest, the new owner.
Yes.
So the buyer has the interest.
So as long as they own the property, whether that's 7 years or 70 years, the policy is in existence for that period of time.
Correct.
And can one purchase different levels of coverage, or is there just one standard?
Yeah, so there's multiple policies out there. It starts from your standard owners and standard lenders. A lot of times when it's raw ground, there's no subdivision tied to it. You're usually going to issue a standard policy because the coverage is different. And then you have your extended policy for both the owners and the lenders. And then you have a homeowner's policy and refi residential. There's all these different types of policies out there.
Now, when you say an extended policy, give us an example of what that would cover.
As far as the coverage itself, you're making sure, if you were to insure that, for example, if it's a meets and bounds, so the description isn't like your subdivision, you would require a survey. So there's certain requirements in order to issue those types of insurances because you're covering more. You're covering the boundary lines and things of that nature.
So there are different levels, different endorsements I think is the term.
Correct.
How many different endorsements are there? Dozens of different types of
Hundreds.
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 So
And they make them up every year as we go
really,
through it. Yeah.
so whatever coverage a buyer or a lender may feel the need for the most part, the title company, Oasis, can provide that coverage.
Yeah, as long as our underwriter approves of it, and we have certain requirements from our underwriter in order to issue that endorsement or policy.
Yes. You mentioned a couple of times meets and bounds, and that's a reference to a survey. Did you mention that because that carries greater risk with it?
It does, yeah.
And how is that? How is the risk on that survey greater than perhaps other types of surveys?
So with the subdivision, you have mapped out already all the easements that are part of it or in consideration of. You have everything there on the subplat, whereas a meets and bounds, it's raw ground. And so as you go through the abstract of title, you're discovering these easements. And so what we do in our title examination, our due diligence, we're mapping these easements out to ensure that where the house lies on the property, that it's good, it's not over an easement and things of that nature.
And so the meets and bounds suggest the measurement of feet and degrees and directions, etc. So do you have the property resurveyed
So
to confirm its accuracy?
It's not. It depends on the policy that's issued. And if we require it, such as I have a commercial transaction I'm working with now, where the type of policy they want, along with the endorsements, we are requiring that a survey be done. And the survey will then be shown on the policy that record of matters, and then it references all the things of that survey. So then the new buyer is fully aware of what they're purchasing, and so as the lender as well.
So who would hire the surveyor? Can it be just any qualified surveyor, or is that something that you feel the Oasis would feel the need to hire someone that is, in their opinion, more qualified to do this project?
So typically, the lender or the buyer will hire out that surveyor.
I see. Okay.
And then they have to be, of course, certified. And do an ALTA survey is what we call
Sure.
it. But yeah.
What does ALTA mean?
American Land Title Association.
Which is what?
Which is the organization that they've created to kind of manage and make sure that there's certain mandates out there that
And do they set standards and
Correct.
Procedures and things of that nature?
Yes, they do.
Okay, I see. Back to the survey for a second. I can see the importance of that. What happens hypothetically if you have a direction written as 68 degrees and it's typed or entered into the system as 63 degrees, and years later there's a dispute and it's discovered this error? Is that the insurance that the title company would cover?
So if we're looking at the survey and we're showing that on the policy, then we would go back to the surveyor that originally did that survey and bring up that discrepancy, and then what needs to be taken care of if it's some sort of litigation or a claim that is then.
So if it become a legal issue and litigation ensued, then would you provide counsel and pay for that expense?
So when it comes to, we call it a claim in the title insurance industry, we then give the information to whomever, the buyer or the seller or the lender, and then they would have to file that claim with our underwriter.
I see.
And work through that.
Okay. What does title insurance not cover? Can you give us a couple of examples?
Personal property. So that's something that even though there's things within the home, like a refrigerator, things of that nature, that's what title insurance doesn't cover. We cover real property.
Only real estate. No chattel is involved at all. And if a settlement, in an extreme case, if a settlement results in the owner losing the property, would you cover that entire loss of value, or only up to the maximum amount of the insurance that was purchased originally?
Up to the amount of the insurance that was purchased originally.
Okay. And so in reality, if this occurred 10, 15 years in the future,
Mm-hmm.
there could be a great appreciation enjoyed by the owner, but that's something they have to deal with. Your liability strictly is up to the amount of the insurance that they originally purchased somewhere
Correct.
in the past.
You got it.
Okay, got it. Uh, who does title insurance protect? Now you mentioned the mortgagee and the mortgagor. Uh, kind of define that for us, would you please?
Yeah, so again, your institutional lenders, they'll require the title insurance,
Okay.
which is called a lender's policy. So in that case, it insures and protects the lender that they have first lien position on the property. And when it comes to the owner's policy, that protects a buyer. So it protects anything, like you said earlier, in the past. And so any liens, defects in title, that's where that owner's policy comes in to insure the buyer.
Mm-hmm. Uh, are there common problems that you discover in your normal due diligence? Are there certain issues that sort of are common in the industry?
So when you're doing your due diligence, you come across bankruptcies, you come across divorces. Sometimes when there's two individuals on the property, they're older, both of them had passed away, and it was never put into a trust, then you have probate concerns where you would have to get a property probated through the courts to determine who the heirs are and the personal representative.
Mm-hmm.
Other common are prior deeds of trust that were never released that could potentially still be valid because most deeds of trust, they last for 30 years according to their notes. And so you got to make sure that those are still taken care of. Or S liens, there's just all these type of liens out there that you got to be careful of
Sure.
and vigilant.
I've heard the term used periodically, prelim. I presume that is short for preliminary.
Mm-hmm.
Can you define that for us? And how would a buyer of property use that concept?
The prelim itself, if you're talking about preliminary liens, there's something in the state of Utah called the State Construction Registry, which files preliminary notices, which gives us as the title company notification that this potential preliminary notice can then be perfected into a mechanics lien. So we would have to take care of that in prelim. And then the other use of the word prelim, sometimes our commitment for title insurance are also known as preliminary reports. So then the report gives the buyer a list of, hey, these are the liens and encumbrances on the property. These are the things that need to be cleared prior to closing.
Mm-hmm. I see. Let me set a scenario and see how one can protect themselves. In some cases, closings are somewhat slow for whatever the reason. Let's assume that a contractor with all good intentions sort of accelerates the process, and they start to work before the actual closing, before the title policy is issued. Does that ever happen? And if so, how do you work around that? Or can you?
You can. A lot of times, again, the State Construction Registry was created to allow title companies to prevent us from having these mechanics liens be issued on the property. So then through our due diligence, we ensure those are cleared off a title, or there's certain endorsements out there that allows us to continue on with ensuring title, but with the knowledge that these are, potential liens out there. Because there are ways to get around it. It just takes a little bit more effort and coordinating with your underwriter.
Okay.
Yeah.
And so I guess the story there is that the contractor has to withhold their effort to get started until everything has been placed.
Yeah, and that again, the State Construction Registry, when you're dealing with the construction loan, they also require that those construction loans are filed with that same registry. So it is incumbent upon us to then reach out to those entities that have filed a preliminary notice to then release their lien, so then that construction loan is in first lien position.
Okay.
And
Will you insure manufactured housing that's brought into a site? And will it insure the house or only the site, the parcel, the real estate?
so it only insures the parcel or the land until it is affixed, or the title of that manufactured home is surrendered. So once that takes place, then the home is then part of the real property.
Okay.
But until that occurs, then it's just a parcel of land.
Okay, so once the prefab home, the components are brought in, set on the foundation, and the project complete, is that when the house would be insured? And up to that point, it would only be the real estate?
It depends on the time of issuing that title insurance. So if it's initially when you're purchasing the land, and the land itself, because there's no property or there's no home on it, then we're just doing the land. But then if it's like they call it a construction to permanent financing, then again, we would have to make sure that it has been surrendered, that is actual real property, and the county assesses it that way.
Okay.
Then we could ensure that it's real property.
So would someone from your office go out and make an inspection?
Typically we don't. We
You'd
do
rely on the lender,
yeah, we do
perhaps,
the
or something?
land when it comes to construction, making sure there's no work done, no hole dug.
Sure.
But in this case, where the home is then put on the footings, at that point, again, it would be a surrender of title if it was a manufactured home.
So kind of building on that concept of construction, the process would be you insure the property, and then as the building is constructed and the bank makes draws or makes payment, how does the insurance include this next draw? Over a year's period, there may be a dozen different draws, so the outstanding balance goes up each time. How do you measure that or monitor it?
Through date down endorsements.
Okay.
Yeah.
And kind of clarify the term date down, please.
So date down is then again going back, making sure we're getting those financials, so we know the money is being sent out to these subcontractors, material men, and then we're also checking on the abstract of title. So with the recorder's office, making sure there hasn't been any mechanics liens, things of that nature.
So does the bank notify you each time they make a draw?
Yeah.
They send you an email or a fax or
they'll
some
request that date down endorsement.
Okay, and that's what you're calling a date down.
Correct.
Okay. And as the construction proceeds and is ultimately completed, then are you ensuring the original policy was based on the sales price of the property, or the future value based on the completion of the property? Which of those? Let me clarify that. Let's say that the perceived completed value is $500,000, and over a 12-month period, it starts with raw land, and then that outstanding balance grows. So your original policy, would that be for the total value of the loan?
For the total value of the loan, correct.
Okay.
Yeah.
And it is not based on the sales price of an existing house, but it's based on the amount of the loan.
Correct.
And does that also include the buyer's policy?
So that was the original. So, for example, if it's coming out of a builder to that buyer, whatever that contract sales price, because it could have appreciated in value.
Sure.
As most industry right now, it seems like a lot of people that are, putting a deposit on a brand new home, by the time they actually close on it, they already have $15,000 to $20,000 in
Sure.
equity. So it's not covering that difference. It's covering that initial purchase agreement price.
Okay.
Whatever
So
was
let me
value.
just make sure that I understand. So there are two policies: the lender's policy, and that covers the amount of the loan,
Correct.
up to the amount of the loan. Then there's the buyer's policy, or the homeowner's policy, and that would cover the original cost of the purchase, having nothing to do with the loan amount.
Correct.
Get that correct?
Yep.
Okay, great. Uh, is title insurance a process that is consistent from state to state, or are there variances like on a deed of trust or a mortgage, or is it pretty consistent?
It's pretty consistent throughout the states.
Does the premium increase at all? Are there any possibilities or situations where there could be a second premium due
No,
in the future?
it's a one-time fee.
One-time transaction
Hmm.
that covers the life of either the loan or the ownership of the.
Correct.
Okay, got it. Uh, what are the differences, or are there differences between a commercial property and a residential property?
So residential, a lot of times it's buyers that it's their first home they've ever purchased. It's their biggest investment they're ever going to make their entire life.
Mm-hmm.
And so the searching and examination, and I'm not saying it's cookie cutter, but when you're dealing with the lot and a sub, it's not as technical as when you're dealing with the commercial property.
Sure.
Because commercial property, you're dealing with leases, you're dealing with easements, variances, you're dealing, for example, one I did up in Woods Cross by the airport. There was a path or an easement allowing airplanes to travel on streets, and so
Really?
you deal with those type of things where on your normal residential, it's a lot easier as far as a searching title examination from that point of view. And
Well, that's an interesting how. I guess I'm kind of surprised. There were easements that permitted airplanes to taxi on streets.
correct.
How
Yeah.
did that come about?
Just to grant that access.
And who granted the access?
So so in that case, I believe if I remember right, it was the city granting that access because it was a public road
And so was that years and years ago?
years and years ago.
And
Yeah.
so yet today, an airplane could taxi down one of these streets
Yeah.
and perfectly legal.
Yep, and it's interesting because and this is where I get excited about title insurance because I worked on the title side. You go into cities where there's these huge skyscrapers, there's easements as far as view, and some skyscrapers can't be built as tall as others because you're interfering with someone's view, and so there's easements out there that are crazy, some that are you question, but you have to make sure that it's applicable to your property and that you're taking the right measures of making sure that your buyer is completely aware that
Sure.
this easement is
Yeah.
there.
Well, we've only got a couple of minutes left, but I have a question about technology. How has new technology changed your industry over the years?
It's interesting. We've had a couple players come into our industry and kind of change how things are in regards to the way they promote themselves with social media. But then you have the technology because of the pandemic. They were allowing a lot of lenders allow remote online closings. So now through video time, through recorded platform, you could perform closings 20 miles apart from one another instead of
Interesting.
being in person.
Sure. So is it faster, less expensive, more accurate, would you say? Has technology brought those?
I believe because it is new, the technology itself, you have to pay for that. So the cost is greater because you're having to pay for those type of things. And then the security, you have to make sure as far as cybersecurity that you're protected because of the type of information we do hold within our organization is personal private information.
Indeed.
So we got to make sure it doesn't get out there in the public. And so cybersecurity is a big thing, which just adds cost to our bottom line.
Indeed. I'm probably catching you off guard on this question, but can you give us an idea? Are there few legal issues between the homeowner and the bank that would impact their title policies, or is that a very rare event?
It's a very rare event. As far as it could be mortgage fraud,
Mm-hmm.
if the buyer's not disclosing correct information
Sure.
and the use of the property. But for the most part, the lender's policy is exactly what it is. It's insuring the lender.
Sure.
And that's something that would be between us and the lender.
So is that fair to say then, with few or seldom legal issues, that the industry has, for lack of a better word perhaps, sort of perfected itself? That the policies have become, and the process has become very sophisticated and accurate, to the point where those potential risks have maybe been at least greatly reduced, if not eliminated.
Yeah, and that's
statement?
insurance, right? We mitigate risk and we ensure that these are protected and that we're protected as well.
Indeed.
And
Sure.
not have people off the street coming in wanting to do a transaction, which is completely illegal.
Sure.
And so, it's part of our due diligence that we do to ensure
Indeed.
that we're protecting our underwriters as well.
Yes. Well, Beau, thank you so much for your time. This has been really an interesting topic. We appreciate you spending some time with us. That concludes this episode of Stringham Real Estate Edge. Today's program was brought to you by Stringham Schools, educating real estate professionals since 1989. Visit stringhamschools.com to learn more. We want to thank today's guest, Beau Pili, and don't forget to tell us what you think in the comment section below. I'm Gary Barnes, and I'll see you on the next episode of Stringham Real Estate Edge.